Well, today we're honored to have Mr. Paul Chan, Financial Secretary, the Government of the Hong Kong Special Administrative Region, to deliver his keynote remarks. Welcome to Mr. Chan. Thank you, Mr. Chan.
Central Bank Governors, Dr. Carstens, Eddie, distinguished guests, ladies and gentlemen, good morning. A very warm welcome to you all to Hong Kong, Asia's World City. And as you are here, I trust you are able to see for yourselves that Hong Kong, after 3 years of pandemic, is quickly regaining its vitality and vigor. We remain a safe, open, and globally connected metropolis, not to mention its shining beauty under this perfect autumn weather. Though for this time of the year, it used to be winter. Climate change is really something that we have to address urgently. And this glamorous city continues to steadfastly uphold the one country, two systems principle. We hold the common law system and the rule of law very dear to our heart. We treasure our international character that forms the fabric of the society and is the very foundation of our success. As an IFC, Hong Kong enjoys a close working relationship with the BIS. We have had the privilege of hosting BIS Asian Office alongside its Innovation Hub Hong Kong Center since 1998. The history of Hong Kong's collaboration with the BIS is a testament to our shared goal of fostering international cooperation and safeguarding the stability of the global financial system. The quarter-century history of the BIS Asian Office runs in parallel with a period of remarkable growth in this region. As we all know, it was not all smooth sail. The region has been through economic cycles, financial crises, pandemics, and occasionally social turbulences. From the Asian financial crisis in the late 1990s to the global financial crisis in 2008, and the market squeeze at the onset of the COVID pandemic. Despite all these challenges, our economies and financial systems have continued to grow in size and sophistication, demonstrating resilience and adaptability along the way. Being Asia's key financial center and a small, open, and externally oriented economy, Hong Kong has been the epidemic center of many of the trials and tribulations that Asia has experienced. Yet, Hong Kong's financial system remains eminently safe and sound. Each time when we weather a storm, we emerge stronger and more resilient. The linked exchange rate system is a good example. Having gained experience from a bumpy road, we introduced various measures and refinements back in 1998 and 2005, respectively, and have formed a robust regime of convertibility undertakings. Of course, it is backed by a substantial reserve in the exchange fund amounting to over $400 billion US, about 1.7 times of our monetary base. Let me assure you that the Hong Kong SAR government puts financial stability and security as one of our top priorities. Over the years, we have built up robust regulatory regime and strong buffers. We ensure our rules are high quality and consistent with international standards, and we have remained vigilant against emerging risks. In particular, in light of daunting challenges and changing circumstances, we have established a high-level cross-market coordinated round-the-clock monitoring mechanism covering all sectors of the financial market, allowing us to detect if risks are looming. Naturally, given Hong Kong's role as the gateway to the Chinese mainland and the global offshore renminbi hub, the central authorities have given us unreserved support and backing in both regulation and development. One example is the renminbi 800 billion currency swap agreement with the PBOC, for which we have ample additional liquidity support in renminbi. On a wider perspective, the expanding and deepening connect schemes with the mainland, from products to derivatives, from institutional investors to individual investors, are boosting the liquidity and ecosystem of Hong Kong's financial markets. Ladies and gentlemen, as we gather here today, let us remind ourselves of the critical importance of cross-border collaboration. The financial sector is a global marketplace where capital moves across borders at awe-inspiring speed and volume. Such international capital flows bring enormous benefits: more funding for business, investment opportunities, and economic growth. But they also expose economies to potential shocks and vulnerabilities, from the Asian financial crisis to the recent turmoil in the relatively obscure corners of regional banks in the United States and a global bank in Europe. It means that crisis can readily ripple through the global financial system, only now with an even greater speed. At all the episodes that I just mentioned, central banks and regulatory authorities have been swift to take coordinated policy actions to restore market confidence and stability. And once the pressure has eased, they also share lessons learned and implement globally consistent measures to address the vulnerabilities that were exposed. To this, I wish to express my sincere appreciation. But as we all know, finance is imminently adaptable. New and previously unimaginable risks emerge as financial sector reacts to new regulations and develops new products and services, many of which, such as virtual assets, are borderless in nature. Government and central banks must therefore continue to work together, share knowledge, intelligence, and coordinate policies to ensure the stability and resilience of the global financial system. Ladies and gentlemen, despite the proven benefits from international cooperation, deglobalization, decoupling, or de-risking pressure has emerged in recent years. Whatever guises that it may take, reshoring, friendshoring, or onshoring, severing cross-border linkages will hinder economic growth, limit access to global markets, disrupt established supply chains, and impede the flow of goods, services, and capital. fragmentation of international financial market can lead to increased costs, reduced market liquidity, and ultimately a weakened global financial system. Moreover, deglobalization and decoupling could deepen economic imbalance and regional disparities, as countries may face reduced access to markets, investments, and technology. Such economic divisions could also potentially increase tensions and conflicts among regions. All these elements will potentially bring more sustained inflationary pressures across the group. The monetary environment will be more challenging. Fortunately, a full-blown decoupling now seems less likely to happen, given the temporary easing in geopolitical tensions and the highly interconnected nature of the global economy and financial system. Also, not all countries are moving down this competitive path either. Many economies, such as those in the Middle East and Europe, are diversifying their investments and strengthening their connections with economies in Asia. In recent years, Hong Kong has played a very active role in fostering such collaboration across regions. We are now seeing more enlightening results. The lessons learned from history, as well as the recent experience of the COVID pandemic, have demonstrated that we share one planet. At this very moment, we are also facing pressing challenges that demand collective efforts to overcome. Climate change is a prime example. The transition to a greener future is inherently a shared moral responsibility and has a chance of success only if we work together immediately. Another is technological advancement and artificial intelligence, which hold great promises, but could also fundamentally disrupt the way mankind works and lives. Regardless of our nationalities and affiliations, the efforts of everyone in this room are critical to addressing the challenges that lie ahead and to ensure that we benefit from rather than being overwhelmed by such technological developments. Ladies and gentlemen, by fostering dialogue, building trust, and working collaboratively, we can forge a path toward a more sustainable and resilient future. Today's conference is part of this bigger effort, and I wish you all a fruitful discussion today. Finally, may I extend my heartfelt congratulations to the BIS on its 25th anniversary of the Hong Kong office, in fact, Asian office. For so long, BIS has played an important role in promoting collaboration and dialogue among central banks in the region. You will continue to be a valued partner of Hong Kong. Thank you very much, ladies and gentlemen.
Thank you very much, Mr. Chan, for that address.